let's talk about the major markets first. Now, as you can see on the screen there, rental markets are beginning to tighten up and have been really for the last couple of years, particularly in the Sydney and Perth markets, and now starting to creep up in Melbourne and Brisbane. What we're seeing with that, of course, is whenever you get a price rise, what happens next is, whenever you get a rental rise and you get a strengthening of the rental market and vacancies go down and all those sort of things, what we're starting to see is that the prices rise after that. And when you take your little trip around Australia and you look at all the major capital cities, there's a general trend of more confidence in the market. And certainly the rental yields have really been pushing on. I mean, Sydney's been strong for quite some time, and so too has Perth to a large extent. Melbourne is just kicking in. Brisbane is just kicking in. Adelaide just ever so slightly starting. Darwin's been strong for a while. Darwin's doing really well. Canberra a bit slow, probably will remain slow for a while, and Hobart slow as well.
I read an article during the week that Hobart had good rental growth.
Starting, is it?
Yeah, so there's I think there was 3 to 4% in rental growth over the last year, and so that's a good indicator.
Mm-hmm. Population obviously is the other thing you've got to look at when you're looking at all the capital cities, and you look at demand versus supply, and the population in the Australia generally has been increasing, but mainly due to migration. Our birth rates have been pretty steady and pretty stagnant for a while. But the forecast for growth in the next 3 years is actually a 5%, with rental growth going at about 7%. So that's pretty good. That's not too bad at all when you start to to consider where your property's at, to get a 7% growth in income, because that's what it means from your rental properties if we're looking at 7% there. This is a graph of some of the housing market there. You can see we've got Perth, Hobart, Darwin and Canberra. And you can see we've got an indication as to where it's gone up to the end of 2013. And that's kicked along pretty strongly through for 2014 when you look at Perth and Darwin. They're the two blue ones up the top. Whereas Hobart and Canberra, you got a tiny bit of an upkick there in Hobart, and as I say, Canberra's remained reasonably flat. That's probably the trajectory of the trend as it's going to go. Canberra's going to have a relatively flat period for a while. It normally gets some overflow out of Sydney. It's the pebble in the pond effect, where Sydney has a growth spurt, and eventually the rest of New South Wales kind of ripples out from there. That's kind of being overshadowed at the moment with the cutbacks in the public service and other things going on in Canberra. So it's a wait and see. I think it's a cautious market right now for Canberra. There is an oversupply in units, but that's not the case for housing. There's still some good deals to be done, in the housing sector there.
I saw just last week a platinum deal in Canberra.
Oh, some good deals in Canberra if you're manufacturing growth.
Yeah, there's $200,000 or $300,000 in it for a 2-lot subdivision. So.
And I want to point that out when I'm talking, economic growth. I'm talking natural growth. That doesn't mean you can't get out and do, an absolute cracker of a deal in the flattest of tax of markets. So don't get confused with good deals and economic growth. There's good deals absolutely everywhere. And as Ian just said, $200,000 or $300,000 out of a relatively flat market for a manufactured growth deal is pretty good. So don't be disheartened just because I may not be totally buoyant on your particular city. I think I skipped over a slide. There we go. That was the one I skipped over. This is the Sydney, Melbourne, Brisbane, Adelaide markets, and you can see there the big performer has been Sydney, and probably will continue to do so for at least another couple of years. But Melbourne's ticking along. Melbourne's starting to kick back up now, which is good. It's mainly, again, the housing sector that's doing that, although for Sydney and Melbourne, what you're seeing is a big influx from the Chinese market and an influence in the apartment market, particularly in Sydney, but to a lesser extent in Melbourne. And really, I don't see that easing greatly. It may not be quite as much as we've seen in the last 12 months for those two cities, but it's certainly not going to drop away to nothing. So that's something to consider when you're looking at the hotter markets, being particularly Sydney, but also Melbourne starting to come into that game as well. Now Brisbane's only just started to move. Brisbane's been undersupplied from a housing perspective for quite a number of years. It's been knocked around by the elements for a number of years, and what we're now seeing is it's starting to kick along and respond to its fundamental economic core, as opposed to responding to market sentiment, which has been a little bit down in Queensland in previous years, but that's starting to kick along now. Adelaide, from a natural growth perspective, probably won't move too much until Melbourne's had a good run. So we're going to see a bit of a better run out of Adelaide once Melbourne's had a good kick along.
What I like about this graph here is that it shows Sydney, and people are saying that Sydney's crazy, and there's no doubt that Western Sydney professor will get on a current affair in the next month or so and say that there's a bubble about to burst, which he does every 6 months, whenever that move happens. Though when you looked at it, actually Sydney went down in value when 10% at its maximum in those years there, and that was an overshoot of what happened post-Olympics. So from 2000 to 2003, you had an oversupply. You had Harry Triguboff and Meriton dumping apartments onto the Sydney market, and it's similar to there's a lot of rental units coming onto the Melbourne market as well. So that overshoot. But what this says is that from 2003, Sydney has moved 30% or 35% since that back then.
I think you need to understand the graph here as well, because what we've done there is all of these cities we've put it at zero in 2013. So these are not compared to each other; they're only compared to themselves and their 2003 pricing. So you can see that 2003, the bottom one there, Sydney, has come off the boil for a lot of years through to really the middle of 2008. And that's to be expected because of what Ian was talking about there before. And then you look at Melbourne. Melbourne had some golden years through all of those years, but that's against itself. So don't try and compare one market to the other. It's just they're comparing against their own 2003 pricing.
And if you look at this graph as far as Australia is concerned for its historical time of property doubling every 8 years, well, you can see from Sydney 2003 to 2013 hasn't had a double yet, I could probably assimilate it to 1985. If you bought a property in 1985, by 1988 you'd had doubled the price of the property. But from 1988 forward, there was a flat market for a little while. So these are the things that Dymphna keeps on saying. And Dymphna said 2009 buy, and look at what it did in Sydney. That swing up there.
I said Sydney tsunami, and look what happened.